ranging then. So maybe this move up was market open, this was volume push, and then market started to range. You see how you had volume, then range, then volume, then kind of like range here, then volume and range. This is how price moves. Price will move with volume, and then there's going to be some sort of a range. Whenever there is a range, you will see some sort of confirmation within that range that okay, we might start moving up now. So when price was ranging over here, this was your confirmation that okay, we might start moving up. Some took the trade, some took a pivot trade, some waited. Why did the top of the wicks not put you off, please? Oh, we didn't take a trade. This was just anticipating. Every example that we're going to do here, we're just anticipating trades, right? Step one to being profitable is to anticipate trades. When you can anticipate trades long enough, then you start executing on those trades because your confidence is up. Because now, so for example, I've been looking at US 30 for about a month now, right? I've been anticipating moves on US 30, and I think from June I'm going to start executing on US 30. So that's important. Why isn't first pullback after bottom of page everything? What? Why isn't first pull back after bottom of page everything? I don't understand what that means. So maybe this was a retest here. Like we're just anticipating trades. We're just anticipating. So just to keep it simple, we're just seeing if price is going to go up or down, just so that we know if we are right or wrong. All right, let's go to the next example here. Okay, so what's happening at this point? What's the number one thing we see? We see prices ranging. Someone said dog shit. That's also good. But first of all, what we see is this candle. Then we see this candle, and then we see this candle, right? So looking at these three candles, can't we see that a support has been formed? Yeah, support has been formed, right? So we have a support formed right over here, support formed, and then we have some sort of a resistance forming over here too. So at this point, we cannot take a trade because it's just very hard to take a trade, because we're in a small range. But also it's rejecting down here, so we need some confirmations. Now we have a candle going up into this level. It's at a minor resistance. We can't take a buy because it's at a minor resistance. We can't take a sell because candle is bullish, right? So now we have another candle looking like this, and now we have another candle looking like this, and then we have a candle closing above this area, right? So let's say, for example, now we have this range here. Let's say this range was 50 pips. Would this be a good opportunity to take a buy? Someone said, hell yeah, but if this range was 20 pips, then it would be very difficult to take a buy because someone would say, okay, hey, since we don't have prices to the left, so we don't know how big the range is. But hypothetically speaking, if this was a small range, we would anticipate price going up, but we wouldn't take a buy. If this was a bigger range, a 50 pip range, then someone could say, okay, well, this was a minor resistance, price respected here, price rejected, this candle closed above all the candles to the left, and we have ample range over here, so this could be a better opportunity to take a buy. Yeah, so if this was a bigger range, what time is it? We don't know what time is it. So every example which we're going to look at here, it's going to be a time when there's volume in the market, right? It could be New York Open, London Open, Asian Open. There's going to be volume in the market, right? So let's see here. So yeah, perfect. Next candle went up. This was perfect because this candle closed above the highs, and if you had a stop so far by now, I expect everybody to know where your stop loss is going to be. If you're looking for buys, it's going to be below a bullish candle. What some people do is they put the stop right at the wick. That's wrong. The reason why it's wrong is because the spread can take you out. If price comes down, the spread can take you out. So always have it a couple pips below the candle. Yes.